Good morning, everybody. It's Chris Robinson Ag Marketing, with today's pre-opening grain and livestock comments. I wanted to first start off with what's going on with money flow, what people think. The funds are short a bunch of wheat now, about 75,000 contracts in Chicago. They're long corn, but probably less than 50. We'll see what happens on Thursday, on Friday when we get the committed traders, but I think they've liquidated most of what they're going to liquidate as we head into the rest of the month of June. They're still long 100,000 beans, and that's probably what people are waiting to see if the shoe drops there. So make sure you keep your downside protection on your beans in case there's one more flush. The crop conditions came out. There's nothing really negative yet. So there's no weather story there yet. It's too early as well to tell. The USDA is going to give us a report on Thursday. Typically, that's not a big one, but you never know. And let's face it, we've just had a huge blowout. So what more could they do to hurt us at this point? That's my opinion. So I look at this as an opportunity to make sure that if you did have puts on before the break, and I know some guys did, some guys didn't. If you had them on, we rolled them down. We wanted to take money off the table, period, end of sentence. You have new crop corn sitting here at $4.48 this morning. You've got new crop beans sitting here at $11.35. We rolled all of our corn puts down to $4.40, $4.35 in some cases. And with our beans, we've rolled them down to $11.30, in some cases $11.20. Because we just want to keep a floor in case it keeps going. We do want to keep the upside completely open if we get a recovery. Anybody that was short futures on our cash sales, I suggested we cover them as well and replace them with a cheap put. Again, we want to keep the upside open in case we do get a rally. July wheat overnight up 7 cents. Traded as low as $5.81, finished at $5.90. Again, the funds are short now, and are we going to rally? We could get a little relief rally. I mean, let's face it, we dropped from 688 on May 14th to the low yesterday at 574, right? So over $1, and would not be surprised to see a bounce here in the wheat. So again, make sure you roll down your puts. I feel like a broken record. Roll down your puts, and if you didn't have puts, don't cry over spilt milk. What can I tell you? There's going to be more marketing year ahead of us. We'll get more chance to do more risk management. Let's just deal with what we have, with where we are, with what we've got. Minneapolis wheat, 622. Kansas City wheat, 635. Kansas City wheat kind of led us higher after bouncing on Friday. Kansas City had a very, very significant correction, 62% correction of the entire rally this year. We started at 532. We finished up at 750. The low on Friday was that 62% retracement. So we've caught a little bid since there. Again, don't lift your puts, but roll them down. In the cattle and the protein complex, that's going to be interesting to see. I would expect continued two-sided trade. It's almost like there's two different markets. There's the first half hour to 45 minutes, and then reality sets in after that. So if you can stay away from it for the first 45 minutes, probably makes good sense. If not, be very, very careful because we have not had a lot of follow-through. We've had a couple days here where we open higher, looks like we're going to rally, and then spend the rest of the day drifting lower. The lean hogs, I'm watching carefully. They made new multi-month lows yesterday. July hit 97.15. The old low you got to worry about in July hogs is 94.20. That was the November 21st low. Again, I sound like a broken record. Roll your puts down, roll your puts down, roll your puts down. And if you are a bottom fisher, if you do think that this is overdone, call options are extremely cheap. I had one gentleman yesterday on social media say, you're expecting farmers to spend money when things are tight. No, I'm not. Everybody's in a different situation. I understand that this has been a tough marketing year. I also understand that we had 30-month highs in new crop corn and new crop beans, so you did have a shot before we fell apart. We may get one more shot if we get a weather issue. I don't know. So that's why we would look, if it makes sense, if you can afford it, you don't have to spend a lot, 5, 6, 7, 8, 9, 10 cents on some very cheap 20, 30-day options might keep you in the game. Again, making that suggestion is not saying, hey, this is 2012. Hey, hold on to your hats. We're going to have a huge rally. We need a weather issue to get something like that cooking right now. All right, this is Chris. Have a good day. If you're looking for help, give me a call 312-638-8868. If you're not getting my letter, sign up for it. Robbins@agmarketing.com. Have a great day. Thank you very much.